Hi, my name is Rob Swanson, and if you love the idea of designing your life, you're in the right place. This is the show about real estate, money, and life to get you motivated and help you navigate the road to freedom. Whether you want to start investing in real estate, scale your business to the next level, or sit back and reap the rewards from passive income, I'm here to help you achieve freedom in all areas of your life. So now, sit back and enjoy. This is the Real Estate Mogul Podcast. Hey everybody, Rob Swanson back with another episode of the Real Estate Mogul Podcast. Hey, in today's episode, we're going to dive into 7 keys to successful real estate investing. And what I want to do is I want to unpack this idea of, what does it take to be a successful investor? I remember 20 plus years ago, the late 90s, so 22, 23, 24 years ago, making the decision to get into real estate investing. And I remember reading a book about real estate investing and thinking, man, I don't even know how to think like this book is teaching me to think. Now, that doesn't mean that I didn't have insights or training or conversations, growing up in my household, in my family, that taught me to think in certain ways. But this was a dynamic shift in my approach to thinking about money, business, building wealth, cash flow, all of the components that real estate is notoriously good at producing. And so I remember reading the book and I remember thinking, I don't think this way. And how do I have to change? What do I have to learn? What do I have to do to get to a place where I can, in fact, think this way? And that started my journey. And it started the journey of diving into information, knowledge, and a relentless pursuit that, frankly, continues to this very day. I am a voracious reader. I like to read. I love listening to podcasts. I love studying things. I buy programs on the internet almost weekly, and I go through them. I'm a voracious learner. I love to learn. And all of that knowledge that I add into the repertoire sometimes comes out and produces results right away. Other times it's something that sits in the back of my noodle, and it comes out at the time it's supposed to come out. And sometimes I don't know when that's going to happen. Sometimes it's pretty obvious. I'm learning to pursue a particular objective or a specific result. And other times I'm learning because I'm curious. And sometimes learning out of curiosity is an okay thing. I have gone down the paths many times of saying, I'm interested in learning that. I'll invest in a program. I've spent, everywhere from $7 to $50 to $100 to $500 to $1,000 to multiple thousands of dollars to learn something. And as I've learned it, I've decided, that doesn't serve me. It's not what I want to do. And sometimes it's okay to go down an education path and then pivot, because you didn't lose in that investment. You gain knowledge, and you never know when that knowledge is going to come back full circle and produce something for you that you had no idea it was going to produce. That's what I want you to be thinking about as we go through this conversation of 7 keys to successful real estate investing. And the number one key that I want to highlight here in our conversation today is having a money mindset, which, as you think about having a money mindset, it also includes, and is imperative that it includes, a healthy respect of money. Now, I want to take you back to the roots where I learned a healthy respect of money back in the day. And my dad, as I was growing up, and this was, me back in the 80s, growing up as a middle schooler and high schooler, my dad never walked by a phone booth. Now, some of you don't even know what a phone booth is, or, you'd walk into a restaurant and in the little entryway into a restaurant, there'd be a phone hanging on the wall that you could put a dime or a quarter or whatever into. And then if you put in the money and then you went under the minutes, it would give you change back. My dad never walked by a phone booth without sticking his finger in the little change return and just checking to see if there was a quarter in the change return. And I watched him do this, and I never saw him not do it. And what it taught me was a healthy respect for money, because I've asked him, and I would ask him about it occasionally. Dad, why do you do that? And he said to me, Rob, the reason I do it is because most people won't. And what I learned from that statement, the reason I do it is because most people won't, is I can't tell you how many, cups of coffee at the local bakery he probably paid for himself with those quarters that he found by walking through and sticking his finger in the change return. He didn't get rich because of it, but it developed a mindset and a habit that he respected money. If a quarter or a nickel was enough to pick up, then so was something else. Something else was enough to pay attention to, preserve and build and treat with a healthy money mindset and a healthy respect of money. Now, the money mindset also goes beyond just the respect of money, which is almost a defensive play. There's a respect of money. You have to treat it well. And there can be a defensive component to that. And oftentimes the money mindset is positioned as an aggressive or a growth-oriented mindset. And so if we switch the conversation, the money mindset, to growth-oriented, in order to be a successful real estate investor, you have to have a growth-oriented money mindset. Now, there's a defensive respect of money, but there's a growth-oriented mindset that you have to have, or you will not simply pursue it. And this comes down to, what's the why? Why are you interested in real estate investing? What are your goals? What are your dreams? What are your aspirations? And does real estate investing help you get there? Real estate investing is a strategy. It's an approach to investing that allows you to, when you do it right, create cash, build cash. You can get cash reserves investing in real estate. And it's also something that, on the flip side, can build cash flow at the same time. And so a healthy money mindset and a desire to build wealth and grow money is something that is critically important as you think about being a successful real estate investor. Without a money mindset, you won't have a big enough why, and you won't have the right mindset to go forward to pursue it and actually make it happen.
Do you have what it takes to build a successful real estate investing business or scale your existing business to the next level, but you feel like you've hit a brick wall and there's something holding you back? If you answered yes, then my team of experienced real estate investor, business development consultants wants to talk to you. This is your opportunity to get paid while you learn the business. But this is not a coaching program. It's not daycare or mentoring. It's hands-on learning where you'll put in the work and we'll guide you through every step to split deals and make money together. I'm always looking for ways to expand my real estate investing business into new markets, create more passive income, and expand my hard money lending business. And my team of professional real estate investor coaches are always looking for ways to make more money by helping students close more deals. So we put our heads together and decided to bring on a small number of apprentices each month. This isn't for everyone, and there are a few requirements to being accepted into the program because this is the only program that we get paid on deal splits. If you're ready for the next level, are ready to join our success team, work directly with one of the experienced real estate investors on my team, and you're willing to put in the work and follow our guidance, go to realestatemogul.com/success to learn more. You'll learn what I'm looking for, how the program works, what you get from us, and what we'll expect from you. So do it right now. Go to realestatemogul.com/success.
Number two. So the number two thing when it comes to 7 keys to successful real estate investing is understanding the difference between price and value. Most people in the masses are introduced to investing through the stock market. And there's nothing wrong with the stock market in as much as it exists as a very efficient marketplace for large companies to raise capital. There's a lot wrong with the stock market when it's truly positioned to the masses as retail purchases of stocks for investment growth. Because most people don't understand the difference between price and value. In the stock market, the price you pay is often equal to the value of that thing. As a real estate investor, it's important that the price you pay is not the value. And the inefficient market of real estate investing allows you to separate price and value. So when you buy a stock, the stock is listed today at $100 a share, and you go pay $100 a share. Okay, so whatever the market thinks that stock is worth, its value is the price you pay. Now, you can look at a stock and you can say, I understand the fundamentals of this business. Most people, the masses, do not have the skill to look at business fundamentals, management fundamentals, market fundamentals, economic fundamentals, financing structures within that business. Most people don't have the ability to read a financial statement and say, you know what? I believe that this $100 stock is actually undervalued. Based on all of these fundamentals, it should be worth $130 today. So I'm going to get this at a near 30% discount if I pay market price. Okay? If you pay market price, you're paying the value the market sets, and the price is what you pay. Most people don't have the ability or the skill to look at a business and determine, you know what, that is an undervalued stock. I'm going to pay the market price because the fundamentals suggest that it should go up over time. It's an undervalued stock, and it's going to reset and revalue at some point here in the near future. And when that happens, I'm going to make my money. Real estate allows you to do that because real estate is a very simple business. It's very simple to evaluate how you look at a real estate deal and determine the price you can pay. Because every real estate deal has a price that makes that deal a deal. And we're going to talk about that coming up here in a moment. But the first key, or the second key, in understanding what it takes to be a successful real estate investor is understanding price and value. Now, in a previous episode, I talked a lot about being a value investor, and we broke that down and we talked about what it is. And this is the supporting element of that entire conversation. If you understand price versus value, and that you're either buying at a discounted price or you're paying a price with terms to separate price and value, with positive terms that are in your favor, win-win for everybody in the negotiation, but it works for you, then you understand price versus value. That's the number 2 thing in the 7 keys to being a successful real estate investor. Now, number 3 is being able to answer a simple question. How do you want your money to perform? If you can't answer the question, how do you want your money to perform, you can't really invest it strategically and with focus in a way that is going to produce that result. So, number 3 in the keys to being a successful real estate investor is answering the question, how do you want your money to perform? Now, here's what I mean by that. Let's just say that you've got $100,000 that you want to invest. And the question gets asked, how do you want your money to perform? Do you want your $100,000 to produce you a 4% annual return? So on $100,000, you'll make $4,000 over the course of a year. Do you want your money to perform at 8%? So on a $100,000 investment, you'll make $8,000 a year. Do you want it to perform at 10 or 12%? on a 12% annual return with $100,000, you would make $12,000. 100,000 in, 112 out, or 100,000 in and 12 out, the 100 stays in, and it continues to produce that return year after year after year. So the first thing you have to be able to answer is, how do you want your money to perform? Because if you understand how you want your money to perform, you can plug it in to the financial calculators. And the way that I approach answering this question is very simple. And there's a very simple 6th grade math formula that I plug in and utilize to kick out, okay, if I want my money to make me 10% a year, what kind of real estate deal do I have to buy? How much can I pay? What kind of income am I looking for? It's a really simple equation. Now, if you want to see how I do it, you can go to realestatemogul.com/napkin, NAPKIN, napkin. And this is a video that I shot a couple of years ago as one of my daughters was graduating high school and leaving for college. And she recognized that, hey, she's not going to be around these family conversations anymore, where all of a sudden she said to me, Dad, I need to learn how to invest in real estate. Can you teach me? So I sat down and on a single sheet of paper, I chicken scratched about an hour or so conversation with her to teach her the fundamentals, the 101 of real estate investing. And the crazy thing about this is, if I would have understood this way back in the day when I first got into real estate investing, it took me years to figure all of this out and develop just a solid thesis of how to approach real estate investing. But I sat down and I taught her these fundamentals, and I posted it on Facebook, and there was such an outpouring of curiosity and intrigue and questions about it that I took it and I turned it into a video training lesson that I give away for free. And it's a starting point for anybody that wants to jump into real estate investing and answer the question, how do you want your money to perform? What does a deal look like? Now, I think it's kind of interesting because as we think about this, I'm going to tell you 2 kind of funny stories. And this really stacks on number 2, which I talked about a moment ago, understanding the difference between price and value. And then number 3, asking, how do you want your money to perform? And so, and it really, it stacks on the money mindset as well, because I'm going to give you an example of something that I did with 2 of my kids as they were growing up in order to teach them that money mindset. And so one scenario was this. My son he needed $40 because he wanted to buy something. And I don't even recall what it was exactly that he wanted to buy. Probably something for his skateboard or something related to that. He was probably an early teenager at the time. And he needed $40. And let's see. And I'm trying to remember how this went. He needed $40. No, I know what it was. He needed $30. This is all coming back to me now. He needed $30 and he had $40 worth of gift cards. Okay. So he had $40 worth of gift cards that he had gotten somewhere. And these were gift cards for, Starbucks and Target and wherever he had gotten in some way. But he had $40 worth of gift cards and he needed to raise $30 in order to go get this thing that he wanted. So he came to me and he said, "Hey, Dad, I've got $40 worth of gift cards. Will you buy them from me? Because I need $40 or I need $30, but I've got $40 worth of gift cards." So what he thought was going to happen was I was going to say, "Sure, give me the gift cards. I'll give you $40. But that's not what happened, because I understand the difference between price and value. And I wanted to buy the $40 worth of value for $30, right? But I also wanted to teach a lesson. And I wanted to teach a lesson in negotiation. And so when he came to me and said, "I've got $40 worth of gift cards And I said, well, why do you want to sell them? And he said, well, I want to buy this thing. And I said, well, how much is the thing going to cost you? And he said, $30. So right there, he told me that he's got $40 worth of value that he's going to sell. And what his need is, he needs $30. Now, I could have offered him the $30, but I wanted to teach a separate lesson. I offered him $25. And I wanted to see what he would do. I wanted to see if he would push back and sell me on giving him the $30. Now, he did push back a little bit. And I said, well, if 25 doesn't work for you, what's the least you would take? Okay. Now I want you to make a mental note of that question, because as you're talking in any type of a real estate negotiation, that's a great little line. If my offer of $25 doesn't work for you, what is the least you would take? And the way I usually frame that is, what is the least you would sell me the house for today? So tell me your number if I gave you the commitment for that cash payout today. So I asked my son that question, and he came back and he said, well, I'd take $27.50. And, big old forehead slap that I had at the moment, because I thought if he would have said 30, he would have accomplished his goal. And I would have given him 30, but he cut himself short below his need, and he said $27.50, and I said, deal. So I bought the $40 worth of gift cards for $27.50. Well, he ended up then having to go and he did some work to earn another $2.50. So he went and did something and worked. Well, if he would have just used his mouth, he would have got the $30 without the extra work, but he didn't think about what his need was. And so I tell you that story because that's one of the ways that I've taught my kids that money mindset. It's one of the ways I've taught my kids the difference between price and value. It's one of the ways I've taught my kids to think about how do you want your money to perform. In this particular case, he had something of value. He sold it at a discount, but he wasn't quite thinking about, I just cut myself short. Now I've got to go put in more effort to make up the difference to get my $30. Now, another scenario is very similar. And one of my daughters had a $10 gift card to Subway. And again, I don't know why my stories today are gift card stories, but she had a $10 gift card to Subway, and she wanted $10 for something. So instead of just coming to mom or dad and saying, hey, can I have $10? I said to her, well, what do you have? What do I get for my $10? Because she wanted to go buy something, and she was just asking for the money. And I said, well, what do I get for the $10? And she had learned this by this point, that she came to me and said, hey, I've got this $10 Subway gift card that I want to sell because I want to go get X, Y, and Z. And I said, great, I'll buy it from you. And I said, I'll give you $5 for it. And she goes, no, it's a $10 gift card. And I said, no, I understand that. I understand that it's a $10 value, and the price I'm willing to pay to buy that $10 of value is $5. So she said no, she wouldn't sell it to me. And she said, I'm going to go sell it to somebody else. So she left. And for the next week, she thought about it, and she tried to sell it, and she tried to sell it to grandma, and she tried to sell it to her brother and her sister and her friends, and nobody wanted to buy this $10 gift card. So a week later, she came back to me and said, hey, I still have this gift card. Do you want to buy it? And I said, sure, I'll give you $5 for it. What do you think she said? She said, deal, I'll take it. So I bought the $5 gift card, or the $10 gift card for $5. Now here's what's neat about this. I rarely eat at Subway. And so I took the $10 gift card and I went to my buddy and I said, hey, I got this $10 gift card. I'll sell it to you for $7.50. He said, deal. That sounds like a great deal. I get an extra $2.50. So he hands me a 5, 2 ones, and 50 cents, and I hand him the gift card. And then I went back and I told my daughter this story, and she's like, what? That's terrible. I can't believe you did that to me. And I said, well, you could have done it, If you would have not been greedy and you asked for $10, you would have found somewhere in there between 5 and 10 that somebody would have paid you. But you didn't go find the right buyer. In this case, I did. And I made a 50% cash on cash return in a 24-hour period. Now, we're not talking about making millions. I made $2.50. But I taught her a lesson through that process. That's number 3. Number 4, knowing your freedom number. Knowing your freedom number is so important because if you know your freedom number, then all of the other things start to stack up and you get to build a strategy to get you out of that rat race and build towards the freedom number. Now, that doesn't ever mean you have to quit your job. It means that you just buy freedom and flexibility. It means that your income, the effort you put in, and we all have to put in productive effort to feel good in the world. Let's put in productive effort. So the productive effort you put in, you get paid for that work. As you build your freedom number, you get to just add flexibility and you get to add freedom to your equation. And so know your freedom number. And that's nothing more than passive income exceeds expenses. Okay, when your passive income, when your income from something that pays you whether you're working or not exceeds your expenses, so income is greater than outgo, you've achieved your freedom number. Most people don't know what that number is. Most people, if I ask them, what's your freedom number? They can't give you a number. You should be able to give that number down to the dollar because within reason, your monthly outgo is probably pretty consistent on a month over month basis. And so if you're paying attention to your personal finances, okay, in businesses, from publicly traded companies, large corporations, all the way down to mom and pops, run a P&L. They run their books every single month and they look, how much did we make? How much did we spend? How much do we have left over? Businesses run a budget and they run their numbers and they know their numbers. Well, most businesses at least run their numbers. It's not always true that the business owner actually knows the number. But a business generally runs their numbers. When you make that switch to the personal side, most people don't. And what I'm suggesting is that you should. So number 4 in the 7 keys to successful real estate investing is know your freedom number. Figure it out because then you can reverse engineer what it actually takes to buy that freedom. When you know the freedom number, you've got a target. You've got a starting point. And what I like to tell people to do is start with the goal of just getting $1,000 a month in passive income. That's it. That is just a simple goal, $1,000 a month in passive income. Friends, it's not that hard. It's very simple. Now, to do that, you've got to understand how to run your numbers. So go to realestatemogul.com/napkin and watch the free training video that I'm going to teach you how to run your numbers. How to evaluate a real estate deal. What is a real estate deal? How did I teach my daughter to invest in real estate? This is Real Estate 101. It's a starting point. Go there and check it out, okay? But number 4 is know your freedom number. Number 5, understand what makes a deal a deal. See, one of the things that people struggle with often is they think that what a seller might be asking or what a property is listed for determines whether it's a deal or not. And that does not determine a deal. What determines a deal is what you can pay for it. So you set the terms of what a deal is. So when you look at a property and you're trying to determine, is this property a deal or is this property not a deal? You won't know that until you determine what you can pay for it. Because every single piece of real estate in the country, in my book, is a deal. because I can look at every single piece of real estate in the United States and I could come up with a price that I would pay. Now, whether the seller is going to accept that price or not, I don't know. But I can tell you what makes a deal a deal. And it's the price I can pay because I know how to run my math. Now, I can run my math on an iPhone calculator. It's pretty simple math. But I know what makes a deal a deal. And so number 5 is understanding what makes a deal a deal. And what makes a deal is the price you can pay. In order to know the price you can pay, you've got to know and understand the difference between price and value. You've got to know, how do you want your money to perform? You've got to understand some of these other basic things that build success as a real estate investor. You're starting to build a framework for how you approach things as a real estate investor. So that's number 5, is understand what makes a deal a deal. Number 6 is build your buy box. Once you have all of these other elements and components in place where you're starting to understand, okay, I know how to run my numbers. I know how I want my money to perform. I know what I'm looking for. I know what my freedom number is. I see where I'm headed. I've got a money mindset. I understand what makes a deal. Then you start to build your buy box. Build your buy box. What kind of deal do you actually want to buy? What are you looking to do? See, you can choose residential real estate. You can choose multifamily real estate. You can choose commercial real estate. You can choose storage, etc. Pick one and focus. What kind of deal do you want to buy? That's the number 6 question or key that I'm thinking about here today as I'm sharing with you, what does it take to be a successful real estate investor? Get focused. Decide how you're going to go hit your freedom number. Decide that you're going to learn how to run the math and the numbers on a particular type of property. Lean into it. Get it so that it's second nature. Make sure you can do it on your iPhone. Make sure that you understand what your buy box is, and then don't deviate from it. Now, as you become a more experienced and successful real estate investor as you go along in your career, a couple of things are going to happen. You might have a buy box for residential. You might have a buy box for commercial. You might have a buy box for a multifamily unit versus a single family house. You might have a growing list of particular buy boxes. But what I mean by that is every type of real estate that you go after, you create your buy box. What am I going to buy? So let me give you an example of a residential buy box. You might have a buy box that looks something like this. You want a single-story, single-family residence that is either brick or stick-built, that is between 900 and 1,100 square feet, that has 3 bedrooms, 1 or 2 bathrooms, that needs less than $15,000 in repairs and is in a C plus or minus neighborhood. Now, if you don't understand the grading system of neighborhoods, on a recent Real Estate Mogul podcast, I talked about how to evaluate neighborhood grades and what those do to impact your deal evaluation numbers. So you can go back and listen to that podcast. But that's an example of a buy box. It identifies what type of property are you looking for, what kind of condition is it in, where is it located, and those factors then lead into how you calculate your buying price. How much can you pay for that property? So when you build your buy box, you know what you can pay for any type of property. And so again, as you scale and as you grow as a real estate investor, you may have different types of buy boxes for different types of properties, but having a buy box keeps you focused because you can always chase a rabbit trail, but that doesn't often produce good results. Just because you can doesn't mean you should. And so focus is one of the most important aspects of building a buy box. It keeps you honed in on what do you do well, what do you understand, and it keeps you focused on doing that type of deal repeatedly. That's what helps you build your freedom number. That's what gets you to a place where you understand clearly what makes a deal a deal. That's where you can understand clearly the difference between price and value within that buy box. That helps you establish the money mindset and puts you in a place to succeed. Finally, number 7. The number 7 key to successful real estate investing is learn to find deals. Now, there are a lot of different ways that you can find real estate deals, and I break them generally into a couple of categories. And there's on-market opportunities. That's through the publicly available multiple listing service through real estate agents. And there's the off-market opportunities. And the off-market opportunities, you can kind of break down into some different categories as well. You can find deals from the field. You can be out about and driving through a neighborhood, and you might see a particular address and the grass is growing up. And maybe the gas meter is disconnected or not there. Maybe it's a property is boarded up. Maybe it just snowed and it's 2 days later, the snow is still there and there's no tracks in and out of the driveway. These are indicators that you might see if you're out in the field, in a neighborhood, driving around and looking at properties. You may notice things that suggest, is that property occupied? Is it fixed up or is it falling apart? Is there an indication visually of potential problem going on? So that's from the field. Another category that I look at often is from public records. And from public records is data and data information that is publicly available in the United States that any real estate investor can access. And when you understand how to utilize the public records data, you can build lists of properties that are highly probable to have some real estate or personal problem going on where you may be able to solve that problem by buying the real estate. And so public records is a great tool. Now, in the software company that I own, Freedom Soft, we have really, really good data and list building tools that tap right into public records. You can build template default marketing lists right inside of the software. Now, the third type of off-market opportunity category then would be specialty lists. And these would be lists that would be something like a code violation list. Your local municipality often publishes a list of any properties that have a code violation. Now, that code violation could be from an unsafe roof to an unsafe tree to grass and weeds have grown up in the front yard. You never know exactly what you're going to get, but a code violation would be an example of a specialty list. Another example of a specialty list, and this one is one that fewer people get, but it's a great list, would be a water shutoff list. So if the water has been shut off to a particular property, that indicates there's potentially something going on with that property that you may be able to solve by buying the real estate. So on market, MLS, retail, real estate agent leads, and then off market. This is all about finding deals. Now, we'll go to that next level. These are all assuming you want to go pursue and find deals. You can also find them from other investors like wholesalers. So figuring out what your network approach is. We recently in the software Freedom Soft added a new product to our suite, and it's called Smart Search. And what Smart Search does, it's a data and research tool. It allows you to type in any address in the United States and get everything from the valuation of the property to the sales history to comps to all of the public records data information to pictures and the street view, and you name it. We've got all of the data available, owner information, mortgage information, all of that stuff available. One of the cool things that we added into the Smart Search product is a thing that we call the dig tool. And the dig tool allows you to type in the address of any property in the country. And let's just say that you're out in the field and you drive by a house and it looks like the grass has grown up, or you've for some reason said, hey, I see that address over there. You type that address into Smart Search and FreedomSoft pulls up a property snapshot. And on that property snapshot, right below the owner information and all the public records and the valuation and the pictures and all of that, there's an area called additional opportunities. And what FreedomSoft does is it takes the search you just did and it says, let's look in this general area and see if we can find any other properties that have layers of potentially motivating factors in the public records. So it may be from a vacant property to a tired landlord to a distant landlord to an absentee owner to all sorts of filters that we build in, and we go look in the geography in the area surrounding the search you just made, and we show you 8 additional opportunities that most real estate investors will never know. And so without doing any extra work, you found one, then we scoured the public records and we found you 8 additional opportunities. That's how you get good at finding deals. You leverage tools, you leverage your network, you leverage people, you leverage knowledge to get good at finding deals. And the dig tool is just one thing that we've put in place that we're really excited about, and we're watching people utilize it as we've rolled this product out, and they're absolutely loving it because they're doing work and they found one property. It's hard to go find good real estate deals in this market today. They found one. And as soon as they put that property address in, FreedomSoft said, hey, what are the characteristics of this? Where is it located? Can we find anything else in the public records in the general area of the search you just made? And we pop up 8 additional opportunities, which is really, really, really powerful. People are absolutely loving it. So friends, this has been 7 keys to successful real estate investing. I hope you got a lot of value out of this. Let me just summarize them again. Create and build a money mindset. Understand price versus value. Answer this question. How do you want your money to perform? Know your freedom number. Understand what makes a deal a deal. Build your buy box and learn to find great deals. Friends, my name is Rob Swanson. This has been another episode of the Real Estate Mogul Podcast. I hope you got a lot of value out of this, and we'll see you in the next one. Bye for now.
Do you have what it takes to build a successful real estate investing business or scale your existing business to the next level, but you feel like you've hit a brick wall and there's something holding you back? If you answered yes, then my team of experienced real estate investor, business development consultants wants to talk to you. This is your opportunity to get paid while you learn the business. But this is not a coaching program, it's not daycare or mentoring. It's hands-on learning where you'll put in the work and we'll guide you through every step to split deals and make money together. I'm always looking for ways to expand my real estate investing business into new markets, create more passive income, and expand my hard money lending business. And my team of professional real estate investor coaches are always looking for ways to make more money by helping students close more deals. So we put our heads together and decided to bring on a small number of apprentices each month. This isn't for everyone, and there are a few requirements to being accepted into the program because this is the only program that we get paid on deal splits. If you're ready for the next level, are ready to join our success team, work directly with one of the experienced real estate investors on my team, and you're willing to put in the work and follow our guidance, go to realestatemogul.com/success to learn more. You'll learn what I'm looking for, how the program works, what you get from us, and what we'll expect from you. So do it right now. Go to realestatemogul.com/success.